Welcome to today's video. If you're a new trader, managing risk is one of the most important things you need to get right. In this video, we'll dive into essential risk management tips that can help you protect your investments and increase your chances of success. Let's get started. Tip number 1. Use stop-loss orders. A stop-loss order automatically sells a position once the price hits a certain level, limiting your losses. As a new trader, it's easy to get emotionally attached to your trades, but stop-loss orders keep you disciplined and help prevent bigger losses when the market goes against you. Always set a stop-loss to protect your capital, especially in volatile markets. Tip number 2. Don't risk more than you can afford to lose. As a beginner, it's crucial not to overexpose yourself. The general rule is to risk no more than 1 to 2% of your trading capital on any single trade. By limiting the amount you risk on each trade, you ensure that a losing streak won't wipe out your entire account. Tip number 3, proper position sizing. Knowing how much of your account to risk on each trade is vital. You can calculate your position size based on your stop-loss distance and the amount you're willing to risk. This helps to manage your overall exposure and ensures that you're not risking too much on any one trade. Tip number 4, diversify your trades. It's tempting to put all your money into one trade, but diversifying can help you reduce risk. Consider spreading your capital across different assets or markets to reduce the impact of any single loss. Diversification can be a powerful way to balance your portfolio and minimize risk. Tip number 5, avoid overtrading. As a new trader, it's easy to get excited and overtrade, but more trades don't necessarily mean more profits. Trading too frequently can lead to unnecessary losses due to fees, poor decisions, and emotional reactions. Stick to your strategy, be patient, and only trade when there's a clear opportunity. Tip 6. Stick to a trading plan. Tip number 6. Stick to a trading plan. A solid trading plan is key to successful risk management. Before you make a trade, decide in advance how much you'll risk, the entry and exit points, and your stop-loss levels. A trading plan removes the emotional aspect of trading, keeping you focused and disciplined. If you follow these essential risk management tips, you'll be on your way to becoming a more confident and successful trader. If you found these tips helpful, make sure to like this video, subscribe to the channel, and hit the notification bell so you don't miss any future trading tips.